Hi traders, Shane from Global Market Trader. Just thought I'd take you through the V2 pullback buy setup. So we're going to walk you through the charts here and we'll have a little bit of a look at how we get into the trade, what happens prior to the trade setting up, and then how we manage the trade and get it to its target. So let's go through the process here. So as you can see, in coming into this trade here, we've got a little bit of a price cluster. I'll just move that out of the way for a second. And we've got on our white candle, but that doesn't go anywhere. In fact, it uses support at 113.32, and then we get a bit of a breakup buy. Now the buy setup on the trend trader is always breaking support, and it's the close of that candle above support, so that tells us that there's a cyan, that's a cyan candle and giving us that the uptrend has started. So once we get confirmation that we have a trend set up, 113.53, we're looking for a breakout 1 point above the high, and we get into the buy and we're into an uptrend. So the trend trader is away. It pushes up to a price of around 113.67, and you see that price pulls back. And what happens here is this is the area that we need to be watching for. So once we get a pullback, we're looking for confirmation that we have a pullback and we can get in on this trade. So what you'll see in your live trading sessions and when you're using the strategies, you'll see that these green crosses will probably print first, and then you'll get the support level print. We have a number of options here. Now, to get us into the market, we can basically go in based on an entry price at support. So we'll go through option 1 for an entry. So option 1 is our early entry. So let's just go through that. Early entry is basically where we see the cross and we take our entry based on the cross. So that price there is at 113.61, so that would be our early entry cross. Now if we use that as a point to get into the market on the pullback trade, we're going to get in most times. So there probably won't be too many times where we won't get filled on our trade. So that assures us that we're going to be in the market. Now that's option 1, early entry. Now the stop on that entry, we have a number of places we can place our stop. We could place potentially our stop at the previous swing low, so down here at a 113.52, or we can use our standard recommended stop, which is 5 to 10 points below support. So that's where your initial stop goes, 5 to 10 points below, depending on what you're comfortable with as an initial stop. Now if we use it 5 points below, our stop would be at 113.52. So that means that we've got 9 points of risk on the trade. Now getting into a trade here on the early entry, that's great. The other two options we've got as far as this trade goes is that we could potentially work an entry off support here at 113.57. You can see here that that doesn't get hit, so there's no way we get into the trade. We can put our entry price 1 or 2 points above support, say at 59. Now we wouldn't have got filled on that trade either, because you can see here that the support level, we're aware of the support level here, and we'll timestamp this. That's at 9:45. Now the trouble is that we've seen our first support dot. So once we get that, we can work a trade 1 or 2 points above that level. Now 113.59 is 2 points above. So how does that help us? Well, it doesn't on this trade because price doesn't come back, but you'll see that on some it does come back and we get triggered into the trade, so we'd work a buy stop. But so level 2 or option 2 for us to get into the trade, and we'll just mark this up. So let's go through that again. Our entry options, entry option number 1 is the early entry, which is the cross that gets triggered in, and that price there is at 113.61. And we'll just show you the data window. It clearly shows that the cross entry, and let's just bring that down, long cross pullback 113.61. I'll just change that color up a little bit so we've got it bolded. There we go, 113.61 is our long X P back. Now basically we've got, that's the early entry. Option 2 is buy 1 or 2 points above or below. So 1 or 2 points above or below support. So we can either work the entry below support or above. And you can see that neither of those two trades options would have got hit. And then you've got option 3 is buying at support. So again, nothing hit there. So they're our entry options. Now, the way in which we can work our stop strategy is that we've got an initial stop 5 or 10 points below the support level. So that's the standard stop placement. The other option for you is to work your stop below the previous swing low. So there are 2 stop options for us when we're placing the trade. Or actually there were 3 stop options for us placing this. Alright, let's go back to our stop options. So three initial stop options. One is that we use a fixed price below our support level. So that could be between 5 and 10 points below our fixed support level. The other option is we work at 1 or 2 points below our previous swing low. So our previous swing low, once the trade sets up, is this area here. That's our previous swing low. And the final option is that we work at a couple of points below our trailing profit. So these small green dots here are our trailing profit. So you can see that the only trade really that would have set up and got us in was the early entry. And if we did work a trailing profit stop, we are slowly moving up as price moves up. Now what I would suggest is once you get the target appear on your chart, so that our target is always going to appear as large, bright green dots. So once that target appears for a buy setup, we basically then want to move our stop to break even. So either way, stop to break even to reduce your risk, because that's telling you that potentially we've got resistance coming and this could be the end of the trend. Now with this one it just trades straight through it, that's great, but that's our initial target. Now with our trades we don't get that fixed target from the first time we enter the trade. So here when we look at our data window, we don't have our target at this stage. So what we'll do is we'll actually, in this instance here, we just work a fixed target, say 3 or 4 times our initial stop. So if our stop is say 10 points, we'll look to work a 30-point target. So you can see that price gets us in at 113.61 on this trade. This is the second contract you're in on, because you may have taken the initial trend breakout here. Then you might scale in with a second contract. Now we're looking to take profit out of the market here at this target, which is 113.98. Now that's a really good level because it's a couple of points below the key level at 114. So that nets us out 37 points. So a nice strong move up there. So as I mentioned, in at 61, out at 38, sorry, out at 98, and that delivers plus 37 on the points. So let's continue to look through this trade and follow this as it goes. And you'll see that price then shoots up again, and we get another pullback here, and the second pullback there is at 114.26. Now on this occasion price does pull back and touches the support level, and we also get a very small target. So on the second entry there, the second scale in entry, basically your target is very, very small there. So that's something to consider when you're trading and watching these trade setups. You've got to be careful as to what kind of a target you run, and if your target presents like that, then what I generally do is move my stop to break even, because that's telling me that potentially we're at the end of the trend. I'm going to cover off my risk. So as you can see, the price eventually trades through that, comes back and sets up another re-entry trade. So again, comes back, hits support. So you would have got in on the early entry, you would have got in on the support level, and depending on where your stop was, you might have got taken out. But if you went in at support, let's have a look at 38. That trade is at 38, and that low there is at 34, so you would have survived the 5-point stop. See, there's the end of the trend target. So 114.55, so just a nice push up there to finish the trade off. So traders, that's a bit of a quick look through the pullback setups, remembering that we have a couple of options as our stops and we have a couple of options to get into the market. So when you're testing and going through these trade setups, you may want to focus in on one or two of these and just whatever suits your style and your level of risk, because if you're using a fairly tight stop, you're obviously going to have a reduced level of risk, and what you'll find also too though is that you potentially may be taking more trades, because tighter stops mean that you don't give the trade a lot of room to breathe. But again, it's something for you to test up in your during your trading. So thank you for your time, everybody, and we'll catch you on the next video training update. Cheers.